might actually be on the website. Give me a second. Let me check. Let me check. I think it might actually be on the website right here. Indicators. And this tool, I just clocked something today, and to me, it's like I have been missing out. So, well, and okay, let me see if it's right here. It's here. Look at it right here. 3D oscillator. Okay.
Yeah, I've seen it before.
Yeah, but this is one thing. You know, I uploaded this strategy up last week, right?
Yeah.
And this week, I noticed that the 3D oscillator, that the main reason I had it for take profit is it's good at spotting the turning points of the market. So where there's going to be a turn, it spots it, and it doesn't work on the 5-minute time frame. It works from 15 minutes and above. But one thing is, when you mix it with the William, and when you even mix it with day trading, it's so beautiful that it's literally amazing. I wouldn't recommend using it by itself, but if you use it with the fundamental tools, you should be winning every time. So let me just point it out. So the first thing you have to notice is there has to be a spike, a major spike in the Williams. Either up or down doesn't really matter, right? Now, when there's a spike in the Williams, the next thing you want to see is your 3D oscillator crossing and giving you a buy signal, right? Now, when you see the spike and you see the oscillator giving you a buy signal, you can choose that as a signal. Let's say, for example, like, let's choose this down first. Oh, wait, let me just choose. Okay, all of this parts consolidating. Let's use here. Let me try to pick one place that it works and it doesn't work. Let's pick where it doesn't work first. So let's say, for example, this is a spike to the buy side. Now, with a spike to the buy side, you want to have a buy signal. When it's a buy signal, it's a green like this. Can you hear me? Oh, you're breaking up, bro.
Okay. Yeah, I can hear you. I can hear you.
So now when it's a buy signal like here, this gives a buy signal, a very high spike. Now this gives a sell signal, so you ignore that. At this point, you can choose to buy, but because what's it called? It's been a while ago that's given that buy signal. I wouldn't recommend buying, but let's say after the buy signal was given, because the buy hasn't done anything yet, so it gives you a buy right here, and you choose to go with a buy, and you can go in that trade and buy. You understand? In which case, if you are done in here, for example, oh, why did my computer just hang? Did my computer just freeze?
That's 30 pips.
Yes, my computer just frozen.
Oh shit.
Yeah. Okay, let me go back. Yeah, I think it's back now. I don't even know where I was because it just swinged me away. Ah, damn. It messed up my 3D signal stuff, 3D oscillator. Let me change the time frame and change it back to 15 minutes. It just messed up the oscillator stuff because it's quite heavy as well on the computer. So let's wait, let's be patient for that to load up. But basically what I noticed is that if we mix this tool, if we mix the tool together with, if we mix it together with
PZ. Hello?
Yeah, I can't hear you.
Can't hear you again, though.
Yeah, I can't hear you as well.
thanks for that, man. I didn't notice the mic was off.
Hello? Hello? Hello?
Yeah, can you hear me now?
Yeah, perfect. It's working now.
Okay, yeah, perfect. So I don't know why it's telling me those system performances. I have the codes up. Let me just close the codes just in case. I don't know, that's an issue. So if you had gone in from here, for example, and you use your fundamental tool, look how where it gave you the entry. It gave you an entry just around here. So if you had gone in, you're right somewhere around the top. So if you had done that, probably price came back here. But if you've taken your first profit around here, 66 pips, but here one end 46 pips, it's a good tool. Now
For itself.
Yeah, for itself. Now let's look
Yeah,
for.
but I don't get why the William is kind of showing up movement around that point.
No. You know, the William gives a dip, then he gives you that, you know, once the dip is finished, it always moves back anyway. Williams will always move back to find the next opportunity. Now, the trick in this is you want to find extreme points. Now, you want to find points like this, points like this, points like this, and somewhere extreme. You don't want to look for a kind of like consolidation market somewhere like that. No, you want it to stretch. You want the William to be stretched out before you even look for an opportunity. So, for example, now let's say we want to pick. Let me go back a little bit. This is where I looked at earlier. So let's say you want to pick. I don't know. Let's just pick a random point. Let's say we want to pick here, for example, when the market stretched out, right? Now look at what happened right here. See, this gives a sell right here, and this gives a sell right here. The Williams is stretching down. But if you had gone in for a sell right here, you would have lost, right?
Yeah.
Now, the main reason I say we combine this, and the PZ is this. The PZ gives you your final confirmation. Now, you can only sell in this scenario if your 3D is still pointing to the sell section. The moment your 3D changes angle, you have to exit that market. So example is this. Now, in this scenario, this is pointing down right here, and this gives a down entry. You wouldn't take that trade until you see a sell from here, PZ. Now, when you see a sell from PZ, right, look, you'll only be able to profit about 36 pips. 36 pips, and look at around this point right here, this switches over. Now, when it switches over, this market is very choppy. You only benefit about 10 pips, saving you the stress of knowing where your stop loss is. But what we want to look for ideally is something that is stretched like this and then utilizing it. Now, I don't really want to use this small time frame right here. It's much better on a higher time frame like daily. Let me switch to a daily chart. So now let's say, for example, here, see this dip, this massive dip on a daily chart. This gives you an entry right here. You can choose to go in right here at the top and benefit, let's say, up until this point right here. So even up until this point right here that I gave you the first buy signal to exit, if you're patient enough and if you have your seasonal chart and still telling you to hold, you know, you can choose to exit at a further date. But even at this point right here, let me check. You should still benefit 668 pips. It's much better on a daily chart. Now, let's say, for example, here, I know here is not that stretch, but let's say your fundamental tool told you to buy and you're not sure exactly when. The William is already moving up. At this point right here, you could have chosen to go into the market exactly at this point, which is almost close to the end. And if you use your seasonal tool, you will have profited about 3,613 pips, depending on what day your seasonal told you to exit. But if you use the three-way system, you wait for this one and your William popping up plus your PZ, you'll have got him right here. It's a much second good position, but what would happen is you'll have profited slightly less. Now, I would choose the three systems together rather than the two. The reason being, the PZ gives you an extra level of filter. Now, let me go back to where we can see market peaking. So we saw market like dipped right here, for example. Now, at this point, you can see right here, you see that dip. So here, you might have want to go into the market right here. if you had gone into the market at this point, if you've gone to the market at this point, you're most likely going to lose because it's going to pull back against you more than 71 pips. So you wait for your PZ. When your PZ gives you the entry, that's when you go into it, and you already know your stop loss is going to be around here, which is 209 pips. Now, that's silly. That's silly to have a 200 and what's it called? 19 pip stop loss. Hold on a second. I just got a message on starts. To have that wide of a stop loss, in which that's why we use our fundamental to give us a date with this. But ultimately, the main reason I'm so excited about this tool is because it gives close to the edge where the market is going to turn. So here, yeah, hold on a second, guys. Apologies for this. People are having issues with the webinar. Let me just try to send the link. Apologies for this, guys. So yeah. So basically, what happens is we want to pick only the tip. I can hear myself. We want to pick the tip. So let's say, for example, here. Now, this gives a sell signal right here. Now, the sell signal has already occurred on the PZ. Or should we go for the buy first? Let's go for the buy first. So this is a buy signal right here from the PZ. And look, right here at this point, right here, it told us to buy. Now, that point is somewhere around here. You see? So if you had bought right here, you're most likely going to profit from all this entire move right here, which is about 800 and something pips. The main reason I choose on the daily chart is much better on the daily chart than a lower time frame, but you can also use the same way with a smaller time frame, but it's just slightly more difficult. Now, you'll have profited about 824 pips, right? If you choose to use the three-way system, the 3D, the Williams, and the PZ, you'll have gotten somewhere around here, which gives you 671 pips, which I think that's a fair enough value. You know, obviously you wouldn't have exited at the top somewhere, you'll have exited somewhere in between. But if you use your what's it called, your 3D, you'll have probably exited right here, which gives you ultimately 329 pips compared to 494 pips. Now you can say, as Mukhtar said earlier, that but the PZ is already dipping. Now, the PZ already dipping means it's looking for a second opportunity for you. So you have to ignore the William, apologies. The William dipping means it's looking for another opportunity for you to sell. So you have to ignore it at this point. And just keep in mind that, the market might turn anytime soon. So the moment I get a signal from my 3D that, market is already at the tip and is looking to turn, I exit that trade, okay? That solves the issue of, your William is already going back down. Now, let's say we took this trade. Now, automatically, we can see the market dipped with a significant amount as well while we're on the uptrend. So around here, right here, there's a second entry for the sell. Now, either you can go for your second entry for the sell around here, or you wait around here. Now, the market is definitely going to pull back, do his own stuff right here. This is where all the technical stuff comes in, like a support and resistance, or we can use our fundamental tool to figure out the date. You understand? So if the market says, the market is going to consolidate around this period of time, we're going to tend to ignore it and come back on the date that we think is going to be more beneficial to us. Now, I did a small analysis today on what's it called? CHF. I think it was CHF that I did a small analysis on. And the market seems to be moving along the lines with the CHF. So let me pop to this. And I'm going to load up. I can't hear you. You're breaking up.
Before we continue, Sean, about this,
yes. You've muted yourself, Mukhtar. I could hear you for a second, then it's gone mute.
Hello?
Yes, I can hear you now.
Okay, so
You're breaking up really badly, bro.
question about the Williams.
Okay, yes.
What? Okay, I'll just.
No, say it.
It
It's kind
seems
of
like
like,
the way you.
yeah.
It's kind of different with the way the seasonal works in the sense that when it's at the top doesn't really mean that it's selling. Yeah.
No. So when
And the next.
when the William is at the top, it doesn't really mean it's a sell point. No. Basically, when the market is all stretched out to the top, that's where you want to look to start looking for your buy opportunities. That's how the William works.
What?
So
Oh, it's more like inverse.
yeah. So for example, now look right here. When the Williams picked right here, you're looking for buy opportunities. When the William dips right here, you're looking for sell opportunities. You understand?
Okay,
So
perfect.
basically what we want to do, the way we use the William is this. We go on the seasonal chart. We look for, okay, let's say that, for example, market is about to reach its top right here. You know what I'm saying? On the 1st of May. So what we want to look for on the William would be a dip. So let's go to the 1st of May, for example. What we want to look for, see right here now, market consolidated. But between that time, you see this dip in the William? Before the 1st of May, the dip, this small dip that happened here, this 2,231 points happened here. You understand? You know, that's what we're looking for. So it says dip, and look at what happened. Just like the seasonal predicted. You know, say on the 1st, it got to this peak right here, and this is it right here. So the peak was on the second peak is on the 4th, but the first peak is on the 1st, right? On the 1st, it got to its peak, and then the 4th was the second peak. So right here, you see that dip before the 1st. So at this point, right here, is the 1st. And guess what? On the 4th, which was the second peak, that's where it peaked the second time. And then boom, market fell. It fell 1,000 pips. You understand? So the William is basically going the direction which you're expecting the market to go. That's how it works. Compared to stochastic RSI, which do the inverse, you're looking for overbought, oversold value. No, we're not doing that with the William. We're just simply following the direction which the Williams is pointing to. Okay, and that's how we use the William. That's how we've been using it all the way through from every single webinar. So, for example, now in this scenario, we're looking on the 14th is today. So by 16th right here, we're looking to buy just a little bit on the CHF from here to here, right? From here, 16th, we expect it to go up to about here.
Yo, what just happened?
I don't even know. It just dropped me out and put me back in. Okay. And so basically, we're looking to buy just a short-term buy. So in this scenario, for example, as you can see right here, let's say, okay, let's look at the, I'm going to go to the, oh, actually, I'm even comparing it to the wrong market. My bad. Guys, I've been comparing it to the wrong market. I need to be compared to the CHF market. I was comparing to Euro. So let me go to CHF. Yeah, it's kind of breaking in and out. Zoom. Yeah. So yeah. So basically, the CHF market. Now let's look at what we want to do. Let's see if I can look. I don't know why it's acting like this. Yeah, I'll give the analysis on USDC. Second. Can you put up? Yeah, I will do that. Is it better now? Can you hear me better now?
Yeah, it's better now.
Okay, perfect. So what we're gonna do, looking at actually, what I looked at this week was this asset. So CHF. Now with the CHF, right, we're looking for a strength around the 12 of 06. So for it to gain strength, and which means the USD is gonna fall from around the 12. No. Yeah. So wait, hold on a second. Unless I've done this wrong, my analysis is wrong. Today is 14. Okay, 14 should be right here. So around here. Okay, hold on. So yeah. Apologies, I'm just trying to get my bearings right. So around the 1st of 06, right, the CHF is meant to tank. Now, if the CHF is going up, if we're looking at against USD CHF, then we're expecting the USD to fall, right? So around the 1st, right here, we expected the tank to happen. I mean, right here, we expect it to go up, and the 40 years kind of say it's going to consolidate a bit, but start going up from the 10th. So what happened was around the 1st, right here, market seems to consolidate a little bit, then dipped, which is perfect. On the 10th, which was expected dip, it did dip. And then if we follow the move from the dip, and then it goes up a little bit, and it should resume basically its up movement from around, ideally, from around the 12. Now, the 12 is on Friday. So now the up movement hasn't resumed yet. So the up movement hasn't resumed yet, but it's going to resume very soon. In which, when US CHF goes up, the USD CHF will come down. Let me see. So in this scenario, for example, around the 11th, right here, from the 15 years, and if we look at the 40 years as well, around the 11 right here, the CHF lost some small strength, still around the 12. In which, if you look at it right here, the 11 right here till the 12th, CHF lost strength, which gives power to the USD. But I hope you guys are still keeping along with me right here. It's slightly confusing, but sometimes the money gets like that sometimes. So around the 13th, CHF should be resuming its strength, but ultimately the full power should come by 16th. So up until 18th right here. Let me see. Yeah, okay, perfect. So right from 14th, 16th up until 17, 18. So basically what we're expecting is this market to pull up a little bit and then dip a little bit further. Now, I'm banking on the fact that price is going to go even lower to around here. So price should pull up somewhere around here, about extra 68 pips, and then fall for about 251 pips, right? Now, if we look at the what's it called? The Williams is showing up, right? Which means it's expecting the price to go further up, which on Monday I expect, which is 15th, the 15th, price should go up a little bit, but the Williams should dip further because you can see it's curving already. So by Monday, I'm expecting to curve somewhere around here. And by that same Monday, what I would tend to do is shift my time frame to a lower time frame, like the 1 hour, and check the 3D oscillator and look for where it's going to be saying, where the price is going to turn. And to back the claim up, we're going to go to the probabilities for a second and look at the USD CHF probability for June, which, if I'm not mistaken, that should be 10 trading days, 11. the 12th trading day, which is the 16th, is where I'm looking to go into. So if we go to the 16th, so that's 12th trading day right here. It gives me a possibility of 50-50, but look at it. The 17th, which is the 13th trading day, is 62%, 65%. So these 3 days right here, I know I normally say let it be 3 days straight stretch, but I'm banking on this 50-50 going in on the wick of this 50-50. Now it's a risky trade. The market is more riskier nowadays, so I'm willing to take that risk with it. But now I'm going to only take that risk with this new tool, which I have right here. Now, let me point it out to you. See, for example, right here, the William dipped, and we got the down signal from the 3D oscillator. I wouldn't go into this trade unless I get a PZ sign showing sell while the magenta line is still lower than the gray line. Once I get that signal, that's when I sell on this 1 hour time frame. So for example, now let's say for example right here when we go that dip, I wouldn't sell obviously because the entry for the dip was actually right here. It told me to sell, but I wouldn't sell until I get the signal, which this signal didn't even occur till later right here. Now to me right here it's too late, but if my what's it called, my seasonal and probability still tells me to sell, and I see this massive move to the downside, I would gladly take the trade and sell at the entry from the PZ. Now, let's say, for example, you didn't sell there and you want to look for more opportunities. That's why I like this 3D, because it gives you a lot more opportunities than the other strategy, this one right here. So in this scenario, price consolidated a little bit. You can still see there's still a drop in the Williams. It's showing loss of strength. Obviously, it's giving a buy right here, but because we're focusing just on the sell, we wouldn't have gone with the buy, which saved us from going into this trade right here. Because if you had gone into this trade right here, you would have lost. You understand? So in this scenario, this is still giving us sell, and this gave us a sell right here. Our next sell will be at this next point right here, confirming the sell. And this is still dipping down further, and this gives a sell right here. Automatically, you can go with this right now because you already have 2 positions in your sell. You can go with this third sell right here, or you can go after your PZ gives you the sell. Or right here, for example, it gave you a 4th sell right here, and with your PZ and everything, you could have gone for the 4th sell, which only gives you about 36 pips. But at this point, you should be locked in profit anyway. Once you're this deep in profit, I suggest by the time you're 20 pips in profit, lock yourself in profit. 10 to 20 pips maximum, lock yourself in, and that's why you have this second EA tool that does that for you. And to wrap it up, once price turned back up and you see this coming back up and you see this right here, you understand, if you think you've had enough, you can exit 162 pips. Or if you think price is still going to go further down, move all your stop loss behind right here. So that way you do not lose whatever you've accumulated from this point on. At every level anyway, at every level which you get a new entry right here, your stop loss should be moved behind the old one. And your stop loss should be moved behind the old one right here, and the stop loss should be moved behind the old one right here. So if all else fails and price moves down, move back up, this first one, your stop loss is already right here. You will have probably got kicked out in profit. And because you want to let the other ones breathe, you get kicked out in more profit right here, about 126 pips from this first trade, 86 pips from the second trade, and 32 pips from this third trade. And probably if you had like 2 pips from the 4th one, all of that together should have given you over 200 pips profit. Now, what we're going to be doing is this. I know sometimes people are not patient enough to wait for the 1 hour time frame. I recommend it highly, but when on the 16th comes on the 16th at 12 o'clock on the 16th, and you want to sell the USD, yes, you can use trailing stops. I recommend using this sort of trailing stop. Okay, this is the one I'm working on right now. So there's on the EA, there's the EA trailing stop, which is called step keep distance. So which is like for every, let's say for every 50 pips, price should only move 25 pips in profit, which gives about 25 pips breathing space. Okay, that's what I would recommend in terms of trading stops. Yeah, 10, 20 pips trailing stops, I wouldn't recommend it. You understand? Because you will choke the price. You understand? You don't want to have a opportunity like this, and then you end up noticing that you've choked the price. You understand? Like you moved, let's say your entry was right here, and price moved 46 pips in profit, and you've already moved, your trailing stop to like 20 pips in profit right here. You like got kicked out, like right here, got rated, and price gone back in your direction. Then you start chasing it, So to avoid such scenarios, that's the best thing. So we can look at other opportunities such as here, for example, prices like Williams has already shown price is most likely going to turn. At this point right here, the 3D has given you a buy entry with a dot right here. Obviously, you cancel that out by giving you a sell and giving you a buy. But that's why, in order to avoid scenarios like this, that's why you wait for a PZ. And once your PZ gives you that entry, and the magenta is above the gray line, you understand? Go for that buy. Boom. And you already know your stop loss is going to be somewhere behind it, right here, maybe right here, about 30 pips stop loss. And you can profit whatever you have here, 151 pips. If we minus this, about 128 pips. So risking 30 pips to collect 128 pips ain't bad at all. So personally, for me, I want to sell the USD CHF, and I want to sell that on Tuesday. Now, the only time I'm going to be selling that on Tuesday, and I'm going to be using this strategy this time around, because I've seen how it works in the back testing, and it looks very beautiful to me personally. It gives me slightly more confirmation on the edge. It's kind of similar to the USD CHF one. This one that we have, this one that I released last week for everyone to use, which use the EMA. But with the EMA, you can't really find the edge. With 3D, you can find somewhere around the edge, which is giving around the edge. Obviously, you still get some noise with it. But with the EMA, for example, look, if we're using the EMA strategy, for example, at this point, you will have missed the trade because you're waiting for price to go above right here before you take that trade, right? Let me put them side by side. Let me put them side by side. Yeah, this is the same trade. So this trade right here is the same right here. Now, with this strategy I showed to you last week, if you had gone in for the buyer, look, because of the consolidation meter right here, you wouldn't have gone in for this buy move, ultimately missing out that much of a trade. You probably would have got your buy signal, your first buy signal around here, which isn't bad at all. You know what I'm saying? It's safer, and your stop loss would be around here, about 15 pips stop loss. You'll have probably profited about 82 pips, you understand, which is good. You got your first entry right there. Let's see if you got a second entry right here. It's good. And you got a third entry right here, which is also good. You understand? In which you'll be fine, totally fine. And let me change this to a lower time. We can't use this on the 5 minutes. Oh, this is 15 minutes. Let me go on the 15 minutes time frame. But this one, ultimately in this one you got 1, 2, 3, 1, 2, 3 signal, and the fourth one right here is you risking it all. To be honest, I wouldn't have gone in anything at this point. I'll just be comfortable with my 3. But even if you had gone in at this point, you will still be able to accumulate 12 pips before price pulls against you. You understand? So in this one, you'll like go 1, 2, 3 entries, and if you want to go in for this one, 4th, but I wouldn't rule that in, because if you looked at your supply and demand zone, you should have seen that there's a verified resistance right here. It says it right here at the top, verified resistance. Let me see if I can move it. Yeah, verified resistance. So I wouldn't be taking any trade at that point. You understand? So ultimately, that would have given you 1, 2, 3 entries. While in this one, for example, price has gone up and pulled to the top, and you've got that, and you got your entry right here. You like got 1, 2, 3, 4 entries. 4 entries before you actually get to a scenario like, okay, price is going to hit resistance. Now, keep in mind, sometimes, like for example here, I just noticed now, my PZ gave buy entries right here, but didn't give the same buy right here. I don't know why that happens. Sometimes it happens, but the good thing is this 1, 2, 3, 4 signals were consistent. 1, 2, 3, 4 signals. So if you have 2 PZ loaded on the same screen and you see this signal right here, you don't see it right here, then avoid that signal at all costs anyway. Something new that I just noticed right now. So for me personally, this gives you a slight more edge to it. The 3D gives a slight more edge and gives you a more lower, entry. compared to the other formula that my current EA uses right here, but it's slightly riskier, just a little bit more risky. You understand, if you don't know what you're doing, but because everybody right here is slightly more advanced than before anyway. So I would recommend using a 3D and find a way to merge it up and mix it up with your current formula or the current way you trade, and use it to find entry. And I assure you 100%, right? You're going to benefit from this, because I myself will be using it to trade this week. And I want to short the USD CHF this week. And I'm going to be using it to look for entries on Tuesday, and probably exit the trade by Wednesday or Thursday, and hopefully getting about 200 or something pips from that trade. Obviously, there's still more trades to be looked into, but that's the only one I've looked at today. So, and that's one of the ones that I'll be trading for this week. So, in that case, that literally summarized the webinar today. The 3D tool is on the website. If you want to download it, just go to the indicator section. It's right there for you to download. If you have the membership, just go to the indicator section and download it from there, and you can have that to use. And that literally summarized everything for this week, guys. That literally summarized this week webinar. Is there any question? And also,
it was pretty clear.
Did I confuse anybody? I feel like I might have confused somebody. I legitimately feel like that. Oh, Euro USD. Okay, Euro USD. You want me to check out Euro USD? All right. Let me go check out Euro USD. First things first. I'm gonna pop into probability. Let me check out that. I mean, we traded Euro USD last week. Did anyone use this strategy to trade Euro USD last week?
I didn't trade last week. So.
Oh, okay. Anyone traded last week? Oh, okay. Okay, cool. No worries. Euro USD last week was profitable. Got kicked out a little bit earlier before the trade, but it was still profitable. Euro USD, I'm just going to quickly pop into the stuff. So the 12th trading day.
And ZD is the same.
What am I looking at? Euro. No. Exams. You need to study for exams, right? So Euro USD, that's buy. Yeah, all right. Euro USD today is 14th. So for this week, Euro USD is gonna be a sell, mate. It's gonna literally be a sell. So from the 17th, we're looking to sell Euro USD because actually 18th, around 18th would be a sell on Friday. Yeah, but you're gonna be in it for a ride. It's gonna consolidate. It's gonna consolidate before it falls. So let me check. Let me just change this to plain chart template. And so your USD should be. Pump that in here. Go on the daily chart for a second. Yeah, this is gonna sell. This is gonna sell. This is gonna sell really hard. Yeah, definitely gonna sell this. Yo, thank you, man. Aslan, thank you for this, man. This is gonna really sell hard. Literally 400 pips on that one. Yeah, it's gonna sell. Now let's quickly check something before I conclude, because it's telling me the sell will start from the 15th trading day, 16th, and oh god damn, this is gonna be a bumpy sell still. It's gonna be a very bumpy one, though. I mean, we're gonna have to go against probability. I'm gonna have to go against probability on this one. Let me quickly check COT report. The COT has been a mess literally recently. Even the probability has been a mess, and the seasonality has been a mess based on this coronavirus. And wow, the things that we're expecting to move. Oh, I forgot Bowen. I just remembered now. Bowen is gonna move. So let me check the euro first. Let me check the euro. Yeah, I'm not sure. So euro, they're selling euro massively at this moment. So that's a good sign. That's a very, very good sign because that aligns with wait, what have I been looking at? Dude, I need to gather myself together. I'm mixing it up. My brain is moving too fast than what I'm doing. Hold on, let me check this again. But from the looks of Euro USD anyway, it should sell. But the good sign is definitely the commercials are selling. They're selling the euro, and I want to see the probability does not favor it that much. Oh well, I might have to dump the probability on that one. This is not loading yet. Okay, so let's see. Let me see what's happening right here. Oh, bro, don't even stress it, man. We having connectivity issues today as well on Zoom. I don't know why. No, I haven't checked gold at all. No, I'll check gold in a second. So euro, oh yeah, it sells as well. So euro USD should sell around I think 18th or 19th. So around 17, 18, between 17 and 18th. So it should sell. So that should be by Wednesday to Friday. Between Wednesday and Friday, we should see a massive drop in the Euro USD. And this is actually a good one that you want to get into. Now, this is going to be a very high probability risk because probability only shows us that it's going to drop from the 15th trading day, which from the 15th trading day, that's Friday. You understand? Which then correlates with, I think, 18th right here. When is the 15th trading day? So it's around the 18th. The seasonal says it's gonna drop. All the seasonal correlates on the 18th on Thursday. So between Thursday and Friday will be the ideal time to sell. Excuse me, will be the ideal time to sell Euro USD. Yeah, Euro USD is the most manipulated asset anyway. It's always gonna kick you out and do all that nonsense. So basically, we're probably gonna expect price to pull back up a little bit. Pull back up to around this area and then sell. Now, let me try some. I'm going to quickly try some with this Euro USD. I want to use this. I want to use this to my advantage. Actually, let me load it up on fresh. Let me load them up fresh. Let me do everything all fresh now. And so I have an idea which could actually help on the Euro USD. So I'm going to put this here. I'm going to put this here. I'm going to put, I mean, you guys don't have to use this, but because of the way the market is moving now, I'm more inclined towards indicators. That there, I'm gonna put the William row spread right there, and then the last thing I'm gonna do is PZ day trading. So basically, yes. So basically, from what we're looking at on the technical aspect, Euro USD might actually still go up here first before it drops. Now, I can't really say for sure what's going to happen, but looking at the analysis that we just had about a 3D oscillator, you see the drop right here, and then this gives a signal, a sell signal right here. What we need to wait for now is a sell signal from the PZ, and then we should be able to sell. We didn't get an email? Wow. We should be able to sell. So once you get the, listen, guys, did you get an email today? Did anyone get an email from the website?
Yeah, I did.
Okay. At least something is right somewhere because I don't understand what's happening. The email should have been sent out automatically. It's already set on automatic. They set it up for me on automatic a while ago, so we shouldn't have Yeah, 5. Okay, that's still fair enough. Around 5 is still fair enough because there's quite a few people on the list. I'm just trying to get the link to send to someone now. I think Cortland is having an issue to get in. Okay. So basically with the Euro USD, right? See, there's a dip right here, and there's also, the sell signal right here. So the last thing we have to wait for is a PZ giving us a sell signal, and then we go for that trade. Now we know the entry is gonna be between we know the signal is gonna be between I don't know. The signal is probably going to be between Thursday and Friday, right? For the sell signal. So when Thursday comes, there's two ways to go around this. Is either you shift your stuff to about 30 or 15 minutes, the time to frame to 30, about 15 minutes to check for the entry from the 3D and day trading and the Williams spread, to find a better entry, or you can go in with a daily chart. Now, the difference between going in with a daily chart, the difference between going in with a daily chart and the lower time frame is on the daily chart, the stop loss is prone to be higher, right? So on the daily chart, the stop loss is slightly lower. So what was going to happen in this scenario is if we, and I know, guys, this is a lot of lines and this might look very confusing, but please bear with me. I don't really like using too much indicators, but I have no choice at this moment. It helps. Basically, what you want to do is on that Thursday or Friday when this asset is meant to drop, you wait. Just all you have to do is a waiting game. You just have to wait, let everything align. You want to see something around like this. You want to see a dip like this from the William. Then this gives a sell signal. Then just wait for your final signal from your PZ, right? Ideally, price should be higher, should be somewhere around here by that time. Now, you might want to buy it up before that time. I would not recommend it just in case, price does a weird stuff. But what you want to do is be patient enough to wait for you getting all those alignments. And once you get those alignments, then you should go in for that trade. Okay, so between Thursday and Friday, we should look for a sell on the Euro USD. And once you get that sell, it's going to be a very beautiful one because if I'm not mistaken, if price do come up here, somewhere around here, we should see price bottom out around here at least 565 pips, or minimum here 415 pips. Minimum right here 415 pips would be at least our take profit. Or if price literally consolidates and play around this area, we should still be able to profit about 258 pips in total. Okay, you should check Euro JPY. I mean, at this point, anything on Euro should fall anyway because they're already selling the Euro heavily. The seasonality is already pointing Euro is going to fall, and the probability obviously does not favor the Euro USD. But regardless, I'm going to scrap the probability in this scenario and put it aside. It's not advisable, guys. It's not. But the main reason I'm saying that is because I'm going to be using heavy indicators to look for sales opportunities, to find a sell right there. And keep in mind, the way I trade is more robotic than more manual. So in this scenario, my emotions are not really tied to my trades. So, So in this scenario, it's gonna be slightly more different in your scenario. So you have to follow it to the books. Ideally, I would say wait for everything to align. It's very good to be patient. But let's check the Euro JPY just in case we find a full alignment on the Euro JPY. Then that might be a better option for us to capitalize on. Okay, so this is Euro JPY, and let me pop in into the. Oh shoot, gone too far. So the Euro JPY now that doesn't seem to favor us that much. I mean, we just have a bunch of 50-50 right here from the 15th, and But the good thing is this 50-50 is this guy's gonna switch this year anyway. So it's most likely the 15th. Let me check. The 15th, which is 15th?
I think it's actually from the 11th.
11th. Yeah, but look, from the 11 to we're not favored in any way. Right here, everything favors more on Friday. You understand? On Friday, it's looking more like on Friday, that's when the euro is going to drop, because on that Friday, the date of Friday is 19th. Now, if you look at here on the 19th, which is right the next date down the line, everything aligns on the 19th. You see, all the way through to 26th before we get a massive pullback. Now, 26th is next to Friday. So from Friday this week all the way to next week, we should see that flat out fall of the euro. Now, it could happen before time. We have to put that also, we have to put that also into consideration. So what I would ideally suggest is just follow your technical information. It's either you use your 3D or you use what we already have before. Let me check the Euro JPY. Okay, switch that to plain chart. So Euro JPY. This is already kind of looking like it's falling anyway. This is already bottoming out already. So most likely we might have a slight pullback just to rate the people that's already sold. And then we're gonna have a price bottom out. I mean, just by looking at it, I've already seen a section which would be very interesting to look into. So this entire section right here is something good to look into, just in case price pulls back up. And piece of support and resistance. Oh, beautiful! Look, it's just between where I drew right now, because I can just see this point. Price hasn't really retested this point that much. You know what I'm saying? So ideally what I want to wait for is price pulling to here, then I use this strategy to look for an entry on a lower time frame and then hold that price till it goes down. Now, if price seems to want to turn against me, this will notify me first. You know what, price is about to turn against you, so I can put my stop loss into the profit zone. You know, I move a little bit deeper into the profit zone and then profit from that. No, it's only you, bro. I'm sharing all my screens. All my screens are being shared at the moment, so you should be able to see everything I'm looking at. So, like, ideally, price is meant to pull up a little bit and then dip out, bottom out a little bit. And this one will be sweet, because if price does pull up on the Euro JPY, right? Ideally, this might be what happens. Come up here, test, give a sharp fall. Understand? If in scenarios where that happened, that would be about 467 pips. So we're actually looking at close to 1,000 pips this week. If you mix the US, the CHF, Euro USD, and the Euro JPY, we should be able to profit about 1,000 pips this week. This should be a good week for a comeback after, after the coronavirus. Right. One more thing I want you guys to keep in mind is this: stocks probability. Obviously, when it comes to the probability of stocks, we don't have any COT report. Neither do we have the probability yet. I'm gonna try to see if we can get a probability for these ones up on the website. But from the seasonality that we have, seasonality is also a very powerful tool just by itself. If we mix that heavily with a trading technical tools, we should be able to profit from this trade. So what I can see from the Boeing, for example, is what data we had in the 14th now. So around the 25th, right here, Boeing always goes up all the way till November, almost December 1st actually. So if guys keep this in mind, if you're scared to trade anything else, oh yeah, this reminds me of market depth as well. Market depth is something I want to also talk about. Wow, there's quite a lot. Yeah, I feel like this thing is getting more complex now as I'm going through things. Now with the Boeing one, if we play our cards right, which we should do, I don't see any reason we shouldn't, we'll be able to profit at least an extra 2,566 pips. So this is one that you can buy. Look, guys, I ain't even trying to play with you guys right here, but with this one, if this plays out the way it's meant to play out, we're looking at market. This is wrong, by the way. When he says 9 years, 6 years, 3 years, that's wrong data. That's not 9 years, 6 years, 3 years. That's about 40 something years. I have to get that checked if I didn't check that data well. But if damn, I don't know. Thank you, final. Oh, I have the data somewhere. I have the data for the Boeing somewhere. I'm gonna just check how many years that is since it's been doing this. But around this time, right, we should have at least from now, from now to here. So let me just Boeing. Yeah, this is the file. It came in right here. I think. Oh damn. Oh, I was hoping the file was here. The file is in here. I don't know. I'll find a way to get it. But the year is about 50 something or 40 something years at least. If we can get this asset from here, we'll be totally fine. I mean, we'll be perfectly fine. So what I recommend in this scenario is this: if we can buy the Boeing on the 25th, obviously it's only seasonality that we have, so the date might vary a little bit. It might not be on the 25th, it might be 24th or 22nd because we don't have probability yet, or it might be 20 something else, I don't know. Then what we can capitalize on is this: from that point we can hold this trade, and most likely it's going to do a new high. So I'm expecting it to fall a little bit further, but at least 2,000 some pips. It should regain everything it's done from now, or here at least 2,000 pips. So this is one that I think everybody should write down by the 25th of this month. Boeing is one thing you want to invest into. And the main reason I'm saying this is this: it's been following this. So on the 30th of 05, let's check the 30th of 05. Look, that was where kind of like, look, let me hold this in a little bit. 30th of 05 was around here. So 29 right here started taking the boost. So you can look right here from here. Obviously, it's meant to be the lowest point, but prices turn. We can't really blame it on it's coronavirus season, so price turn. But what we notice is price pull back up until the 19th of 06. Okay, so price hasn't even finished that pull up yet. So right here, price is still pulling up. It pulled up here, pull back down. Price is going to pull up until the 19th, and then we should see from the 19th kind of price consolidate and fall again. And when price fall around here, what day was it? 19, yeah. 10 of 06. Oh, damn, am I looking at the wrong thing? No, until the 9th, actually. 9th of 06, my bad. I'm looking at it wrong. So to the 9th right here. So by the 8th, 5th, or the 8th, that's when it fall. Just a day before it started falling. And then price is meant to fall from that time and consolidate up until 25th. So between 24th and 26th will be our entry on this. And the entry zone is going to be somewhere around here, I presume. Price entry should be somewhere around there. Yes, Boeing will run to November. So for me personally, guys, if you want to trade, if this is the one trade you just want to trade for the year and don't trade again, this is probably one thing you should go into. This is one thing you should definitely go into. So Boeing from here to here, we should look at price skyrocketing at least 2,000 pips. Understand? At least 2,000 pips is what you should be aiming to take in this trade. So having multiple entries, you should be able to take at least 4,000 to 5,000 pips in it. And 4,000 to 5,000 pips, even with a 0.10, obviously it's different on a stock level. You trade on a full size. But let's say on a scale of 0.10 level, that's about $5,000 from now to December, which is okay, or 5,000 pounds. Or if you use a whole lot, that would be 50,000 for you to pocket and keep. And if you use 2 lots, that's 100,000. So, I know a lot of people don't have that much in their account, but if you have at least 1,000 in your account to 2,000 in your account, I don't know if they will take a 0.01. If you have at least 1,000 to 2,000 in your account, I see no reason why not being able to go a whole lot on this, or 2 lots, at least 0.1 one lot as it goes. Obviously, you have to find that perfect entry, and obviously using this new strategy that I was showing right here, and then mixing that up with with what you've learned in the past, and trading that alone should be able to move your account to a new level. So even with a 1 lot, or even with a 0.10, the 0.10 should get you with your 1,000. I mean, you have to go a whole lot, but you have to do it in a sequence. So it's 0.10 in 10 places. So it's 0.10 in 10 places, and this should be able to give you at least on this trade, if I'm not mistaken, 20 grand, 20,000, yeah, by the end of the trade. So because the way I look at this, right, I don't see this going down any further. I legitimately do not see this going down any further. Coronavirus is done. At the end of the day, what they're going to always do to companies like Boeing is bailout. They're going to bail them out. They cannot afford to let them crash. They're going to bail them out. Even if the market is going south, they're going to bail them out. The price will go up. They'll bail them out. Price will go up. They'll bail them out. Price will keep going up. That's what they're going to do. So in situations like this, the aviation is still necessary. If anything, I think it's more even necessary now than ever, because they're now going to space. Elon Musk is already going to space. Things are changing. The times are changing. So if anything at all, this is one trade everyone should benefit from. All right. And basically, that literally sums up today's webinar. I mean, there isn't any much I want to talk about. Man, I pray that it recovers, man. It's going to be a very difficult, time for you and the family, but we're sending our love and support from here in the UK, man. I pray he recovers safely, and definitely he's going to recover safely. Try to get him to take a lot of ginger, sea moss, bladderwrack, bulldog. He should take some of those stuff as much as he can. I mean, they're selling the pills now on online, so you can get those, and they'll be good for him. So a lot of sea moss, bladderwrack, bulldog, drink a lot of ginger. It's a lot good for him. And stay away from meat and fish. Stay away from anything meat, fish, dairy. It causes mucus in the body, so you don't want any of that on him at the main time. Let him get some lime as well in the morning. Get some lime, and let him try to stretch. Stretch a lot, man. Stretching a lot will help you get your blood flowing, and also help you stretch your lungs, and to make it more difficult for the stuff to settle in the body. Okay, it's gonna be difficult, but it will definitely pull through. All right. Okay, guys, that literally sums it up for today's webinar. So if you actually missed it, the replay will be on the website. It's gonna be
when would the date be? When would a good date be to get in?
For Boeing?
Yes, sir.
Between 24th and 26th.
Okay.
Yeah. I mean, for you, Cortland, you should be aiming to get like at least 2 lots in. At least 2 lots will be beneficial, I think. 2 lots in this scenario should get you about 40 grand by the end of the move. So it's one thing that I recommend you doing, Cortland, and anyone else should do this, because it's gonna help you a lot. I mean, 40 grand can do a lot of magic to your pocket right now, I presume. So even to my pocket, it's gonna do some wonders as well. So yeah, so basically that's it, guys. Euro USD, we're gonna be selling from between Thursday and Friday. Euro JPY, Thursday and Friday. USD CHF, we're selling from Tuesday to about Wednesday or Thursday. Okay, and that's the trade for this week, guys. And thank you very much, Aslan, man, for pointing out Euro USD and Euro JPY. Those are two good trades. Okay. All right, guys. And the 3D oscillator is on the website already, so you can download that directly. Don't forget, don't be in a hurry. Don't rush. The market is always going to be there. So only take out trades that you know that is in alignment with all the indication. Okay. And with that, you'll be perfectly fine. All right, guys. Take care of yourself, and I'll catch you guys next week. All right. See you. Bye.